Okay, welcome everyone. Thanks for joining today's event. I'm Jason Gumper from MS Dynamics World, and I am pleased to welcome everyone today to a session all about controls that prevent fraud. Our presenters today are Stephen Williams of Mineral Tree and Chris Doxey. She is an independent consultant and with expertise in internal controls and business process. It's great to have them both with us today. As we get started, please do know that we welcome your questions and we hope to keep things interactive. Questions you can enter into the Q&A block you see to the right of the main presentation area. Our presenters will be leaving time at the end to take those. And we also have a couple poll questions, so be on the lookout for those in the next few minutes as we get rolling here. So I think we are ready to begin, and I'm going to hand things off to Stephen Williams to kick things off.
Great. Thank you so much, Jason. We're excited to be here today and share some interesting content about the top 20 controls that can help you prevent fraud, right? It's not one of the typical webinars that we've done, but in the end, a very important topic, and excited to be joined by Chris Doxey as well. So as we advance to the next slide here, we, as Jason mentioned, I'm the Vice President of Marketing at Mineral Tree and Accounts Payable and Payment Automation Solutions, serving middle market companies, working with Microsoft Dynamics ERPs and helping improve efficiency. And I'll let Chris say a few words, and then we'll cover our agenda, and we'll get going here.
Yeah, hello everybody. I'm Chris Doxey, and I have a consulting company, as Jason mentioned, called Doxey Incorporated. I focus on internal controls and best practices, as well as metrics for procure-to-pay and financial operations. And I'm glad to be here today with everybody. Here's the agenda. We're going to talk a little bit about Mineral Tree. Stephen's going to share some information. And as we get into the challenges, we'll talk about how big is the actual challenge for internal controls. We'll define internal controls and talk about the roles and responsibilities, as well as the top 3 critical corporate controls that you need to think about. And then we'll spend a little bit of time going through the list of the top 20 controls and mention continuous monitoring. And Stephen will show us how AP automation plays a role in actually assisting and enhancing the internal controls process.
Thanks so much. And just to give some context about Mineral Tree as a company, right? We're based just outside of Boston, Cambridge, Massachusetts, and as an organization, we are in the category called AP automation or accounts payable automation, which is often a confusing and broad term. AP automation, in the way that we define it, is from end to end, from invoice capture all the way to the payment execution, and doing that with an integration with the accounting systems such as GP or NAV. And so we sell directly to middle market businesses. In addition, we work with banks, and so a bank will purchase our platform and they'll private label it to their commercial businesses as well. Well, the whole goal of increasing visibility, decreasing fraud, and increasing efficiency for the finance organizations that are managing AP. And so as we advance to the next slide, one of the interesting parts about accounts payable space is that the industry for us really doesn't matter that much. In the end, all businesses need to pay their bills. And so as a company, we're working with some well-known brands that you would recognize on the slide, down to kind of your typical small business that is managing 50 bills a month, right? And the idea is that we can help improve that efficiency, but really put some controls in place, as Chris is going to talk about, to prevent fraud. And so with that, with the next slide, what's interesting when we think about the market, right, payment fraud continues to grow. As many of you may have seen the AFP survey that comes out each year, which discusses payment fraud and controls. It's on the rise, right? 78% of organizations indicated they were impacted by payment fraud. And then take that one step further, 74% of the organizations mentioned that they're impacted by some fraud tied to checks, right? Oddly enough, when checks were first introduced, they were introduced to reduce fraud risk, and yet now, hundreds of years later, it's actually the opposite, and it carries the most fraud potential. And then other ideas of fraud that many of you may be well aware is fraud from business email compromise, and so forth. And so Chris is going to walk us through a number of great steps to prevent fraud and thinking about some internal controls there. And then after that, we'll discuss how AP automation plays a role in that and increases the controls that you would have in place to prevent fraud. So with that, we will kick off our first polling question here, and then we'll get right into our session. So folks can take a moment and respond to the poll that is up on your screen here.
And this should be a fairly easy one to answer, so we'll keep it open for another 5 seconds.
All righty, well, it looks like based on the response, about 50% of the audience is on GP, and then another 30% on Nav/Business Central. So good kind of breakdown of what that looks like. So thanks for your participation on that, and without further ado, I will turn it over to Chris to share her thoughts. And thanks again for joining.
Okay, we're going to start out with talking about how big the challenge is for internal control risks and frauds. And one of the studies I look at every year is the Report to the Nations. It's a global study, and it's prepared by the Association of Certified Fraud Examiners. And what is really amazing is that the total loss caused by cases of fraud, not necessarily payments fraud, but across the board, the amount is $7 billion. And what I also pay attention to is what's the median loss for all cases in the study, and it was $130,000. But what is really compelling is that 22% of these cases cause losses of over $1 million. And without having the right tools and the right attention to internal controls, the median duration for a fraud scheme is about 16 months. And obviously, if you have the right tools in place, you'll be able to catch the fraud a lot quicker. Corruption is a common scheme. Financial statement fraud is most common and costly and has a median cost of $800,000. And what we mentioned is that internal control weaknesses were responsible for nearly half of all the frauds reported. And the last key point here is that fraudsters that had been with the company a little bit longer were able to embezzle or steal twice as much. And those with a tenure of more than 5 years were responsible for a median loss of $200,000, and those with a tenure of less than 5 years were responsible for a median loss of a mere $100,000. And people say, well, why is that the case? Well, somebody that's with the company knows their internal control weaknesses and also may know where there could be holes, and I call them opportunities in systems. This is another look at the statistics that Stephen provided from the AFP, and we're looking at 78% of organizations still impacted back when they did the study and reported the results in 2018 for 2017. Checks are still a problem, and then business email compromise. 65% of payments fraud is committed by individuals outside the organization, and 67% of payments fraud is discovered by the Treasury staff. And basically what we're looking at is 92% of organizations say that payment fraud collectively costs 0.5% of the organization's annual revenue. And if you remember that $7.0 billion impact that the ACFE reported, we can say that fraud is still a major issue. And what we'll talk about is, well, what are the internal controls that we can actually put in place to deter fraud from occurring? And many people say, oh, gee, I hear about internal controls all the time, but what is the real true definition of an internal control? And they're basically the policies, procedures that a business puts into place to protect the assets of the company, make sure the accounting data is correct, and they can actually help with the efficiency of the organization, and they actually set in place a control environment for the company. And there are three main types of controls, and we'll talk about a few other ones, but a detective control, preventing an issue from happening, a preventative control, and of course a corrective control is something that happens after the fact. So detective internal controls find errors actually as they occur. So they serve as part of a checks and balances and determine how well policies and procedures are working. And these are surprise cash accounts, inventory, reviews, counting your inventory for both fixed assets, expense inventory, and production inventory, reviewing accounting work, internal audits, and, of course, peer reviews. And, of course, if you're preventing something from happening, you have a preventative control, and they keep errors and irregularities from actually happening. And a good example of this is a system that looks at payments before they actually go out the door and ensures that that payment is correct and not an erroneous or duplicate payment. And other preventative controls include testing for accuracy, backing up data, drug testing employees, screening and training programs, segregation of duties, enforced vacations, and having an approval process built in to make sure that a transaction is proper. And, of course, the physical control over assets is a good one. Corrective controls, we're actually correcting a process after an error is made and actually resulting in a procurement or a procedure change in maybe a procurement area or an AP area, and training programs and possibly discipline for ongoing errors are examples of corrective internal controls. The one that we'll also mention is compensating or mitigating controls. These are really put in place when a segregation of duty control isn't always possible. And what we're doing with a compensating or mitigating control is we're investigating and correcting errors, and we probably should have more of a focus on preventing those errors in the first place. And what we're talking about is these are in place when organizations don't have the staff to really focus on true segregation of duties and make sure that the controls are appropriate to address and actually compensate for any increased risk. And we have another polling question. The question is, who has overall responsibility for your internal controls program? Actually, we're showing a different poll, but that's okay.
Sorry about that. We can bring that one down if you want.
Oh, no, this is okay. So we can actually answer this one. If you're thinking about an automation project, where does your company fall?
All right, let me bring up those results. I think a couple more are coming in.
And we'll come back to this question a little bit later. Yep, so we have just thinking about it, 50%, and the next one is already have automation. That's great, 40%. And let's see, the next answer that's significant is a project that you're actively involved with. So thank you for answering those questions, and again, we'll come back to this question a little bit later. Okay, so moving along, we have roles and responsibilities for internal control, and where it gets interesting is making sure that everyone in your company has an understanding, and let me just go back, and an understanding of what internal controls mean. And what I always heard, from some of my peers and people in other divisions, that, well, gee, internal controls, that's just for finance and accounting to worry about. And what we're really saying here with this slide, that the controller provides guidance and support to line management for the design, implementation, and maintenance of the control systems. And they also probably, in most cases, if it's not the CFO, depending upon the size of your company, they have an oversight responsibility to make sure that the control system is working, is functioning effectively. And our premise here is that all employees should act as business owners and take overall responsibility for the effectiveness of controls within the scope of their responsibility. And that means suggesting changes and certainly addressing risk if there's a fraud situation or a process breakdown. If we look at the roles of the decision makers in the internal control process, I talked about the controller In some cases, the CFO is certainly going to be involved. And in publicly traded companies, the CFO and controller play a huge role because they're driving the Sarbanes-Oxley project and the attestation of internal controls for Section 404. And they act as stewards, operators. They're responsible for strategy and also catalysts. And the catalyst is an important one to mention because they're stimulating behaviors across the organization to achieve strategic and, of course, protect the company's assets, but actually meet financial objectives. And we're looking at preventing cash leakage, aligning capabilities with cost, ensuring the achievement of both business and financial strategy, and changing behaviors to achieve objectives. And at the end of the day, the total responsibility for a company, yes, it is with finance and accounting, but they're actually pulling together all the results to make sure that controls are in good shape for the company. Just going to mention some pain points that have occurred with addressing internal controls. One is complexity and cost, and what we're doing is that in some cases we have multiple ERPs, we have disconnected ERPs, and maybe depending upon technology a little bit too much, and business processes have gotten a little bit too complicated. And kind of going with point number one, we have too many systems, and it's difficult to get a total view of the enterprise in very large companies where things are still siloed. In some cases, there's too many spreadsheets, and what we run into is the control testing is done on spreadsheets, and we don't know what the total results are, what the latest spreadsheet is, and of course, it's a very manual process, which leads into not having enough time because we've got complex processes and internal control programs, and we're not really testing 100% of a process. We're pulling tests and we're doing sampling, and we might not really know if we've dug deep enough. And from an audit perspective, if you find a risk or a control problem, what you should do is expand your scope, and that's difficult to do if there's not enough time. We don't have good data. Data quality is really the responsibility of the CFO and controller, and their role is, of course, to champion for corporate compliance and control standards. It's difficult to do if you don't have a good data process and roll-up process, and again, with multiple systems and business processes, it makes a real challenge. And then the ongoing validation and continuous monitoring, which we'll talk about, to make sure that controls are working, and we need to be aware of making any updates and adjustments if there's an issue. I mentioned that we talk about the top 3 critical corporate controls. And before we do that, here's the internal controls universe, and what we're looking at here is all the different types of areas that impact internal controls. And at the center of the universe, we have processes, systems, and entity-level controls. Important to define the scope, identify financial processes and systems, document the process and system, and the process that goes along with supporting internal controls, making sure that you properly identified risk, define your control objectives, define your activities to support that objective, test and evaluate the controls, and, of course, the assertion and attestation. This is very similar to a Sarbanes-Oxley 404 process, but it gives you an idea of how things work from an internal controls process. So what are the 3 corporate controls that are critical to your organization? And these work the best if they're operationalized into your business processes and monitored by internal control programs. The key controls are segregation of duties, system access, and, of course, delegation of authority. And we'll explain these a little bit as we go through the next slides. I found that segregation of duties is one of the most important controls that you can consider. They're really going to reduce the likelihood of errors, either intentional or unintentional, and with segregation of duties, you're going to avoid having a fraud or an error go on for over a year, and you're making sure that proper segregation of duties is in place throughout the life of a transaction. And there are 4 primary benefits. You're reducing the risk of a deliberate fraud, and you're catching those errors that we mentioned, and you're reducing the cost of any corrective action or remediation as errors are basically found earlier in the life cycle. And your reputation for integrity and quality is enhanced through a system of good checks and balances. So if there's a fraud or a financial reporting issue, chances are that your company is going to be in the press, and you're going to have to jump through a lot of hoops to show what you're doing to mitigate those types of problems. And with segregation of duties, a best practice for implementation is to actually test your controls on a quarterly basis as part of a controlled self-assessment process, and make sure that your segregation of duties controls are updated appropriately. Now, here are the key concepts. What we want to do with SOD and segregation of duties controls is to actually prevent these four boxes from banging into each other. We want to actually keep separate record keeping, maintaining records, asset custody, the access and control of an asset, authorization. We want to make sure that the right person is reviewing and approving transactions, and of course, reconciliation. So what is an SOD conflict? This is actually authorizing purchases and receiving goods against or for that transaction, or setting up a vendor and executing the payment. And what we're trying to actually avoid in AP is the ability to set up a vendor, pay that vendor, and cover the transaction or hide the transaction. This is a little bit of an eye test, but it actually shows you an example of a SOD conflicts matrix, and this is for AP and procurement. And what we're doing is identifying the transaction group name with the transaction types across the top, and we're basically identifying where there could be a potential conflict, making sure that AP entry can't be responsible for checks and disbursements and print payments, and it actually takes you across all the processes. And this is an example of what we look at when we embed SOD controls into processes and systems. The next one is system access, and this one actually is related to segregation of duties controls. And what we're doing is making sure that those access rights are reviewed on a periodic basis, usually monthly or quarterly, to ensure that system access capabilities are appropriate for staff members and a single business process. And we also want to make sure that the SOD or system access controls are in place so that the person responsible for business process can't actually access another business process, that they have no right to do so. And that could actually mean that someone in accounts receivable should not be able to access transactions in accounts payable. Okay, so the next one is delegation of authority. And at the end of the day, this is really a process to make sure that the company is operating and maintaining physical integrity. And in a nutshell, what we're talking about with delegation of authority is that the same or that a right level authority cannot approve a transaction that's actually inappropriate. And by transaction, we mean company commitments, spend, POs, invoices, setting up contracts, and even processing a journal entry. Usually the governance of delegation of authority is the responsibility of the controller. And as a best practice, many companies assign levels of authority to job grades, and those are tied to the employee master. It's actually set up as a workflow within a workflow system, and if the individual is promoted or moves to another department, their authority is automatically updated in the employee master file and the delegation of authority tables. Okay, we're going to talk about the top 20 internal controls. And if you think about the universe that I showed you a few slides back, what we're looking at is making sure that the tone at the top for the company is well communicated throughout the organization. And that's usually established by communicating a very well-defined code of conduct that actually specifies the consequences of noncompliance and make sure that a communication process is in place to communicate the code of conduct, which actually supports the tone at the top. And we mentioned segregation of duties and delegation of authority. These processes that I defined and controls, but they're actually tying back to your company policy. So the controller or CEO or CFO is responsibility for those policies, and then the business entities and business operations are responsible for the implementation. We look at reconciling our accounts on a monthly basis, and we also take a look at our system access controls to make sure that those are reviewed at least on a monthly basis, but particularly after an upgrade, implementation, or an organizational change. Management, we talked about line management a few slides back, but they're responsible for really integrating internal controls into companies' operations. And what I usually say here is that we want to make sure that internal control is embedded in everyone's DNA, from the management down to the employee level. And we want to make sure when we're doing either an assertion or a representation for a public company that those are supported with appropriate documentation. And if you're doing some sort of a quarterly or monthly control or certification, that the supporting documentation is available if you're not needing to worry about Sarbanes-Oxley. Next one is that costs and expenses of operating units have a budget, and comparison of spend is done on a regular basis with variances explained. We want to see how we're doing and tracking against the budget. If we're not doing that, sometimes companies can get into trouble with cash flow, and we might actually see some transactions going through a business unit or business process that maybe are inappropriate. Operating units and processes have a system of internal control, number 10, and we make sure, number 11, that critical transactions are traceable, authorized, have integrity, and the records are retained, and of course, accordance with your policy, which is, again, the delegation of authority policy. We're doing background checks for employees and contractors. Important to make sure that that's happening. We're retaining our business records, and our network and information programs are controlled. We have controls for systems, and with many things being done in the cloud today, we want to make sure that our solution providers have the same attitude for internal controls that our companies do. Contracts and documents get a little bit interesting because there's sometimes a lack of visibility into a contract. And usually they're maintained by the legal department, and those that apply to purchasing are in the purchasing department, but as long as they have legal review. Just to point out that we want to make sure there's a right to audit clauses within our contracts, because that's actually going to help with reviewing any issues that may come up in a compliance review, particularly a Foreign Corrupt Practices Act review. Number 17, and this ties right into our theme today, which is, of course, going to be AP, process enhancements and automation. But if we're reviewing our suppliers up front, and we're doing things like validating that they exist, we're performing a W-9, TIN matching, we're performing compliance screening, and Office of Foreign Asset Control is OFAC, Business and Information Security is the second acronym. EPLS has to do with export control, and OIG is Office of Inspector General. Many companies are doing address and phone verification, and also making sure that the company has a website that makes sense. And the remaining top 20 controls, many companies are reviewing transactions and disbursements over a certain dollar amount, and that's going to depend upon your risk process for your company. And if you're a small company, you'd be reviewing a smaller amount. And then what many companies are doing, they're just reviewing all large international payments and wires to make sure that those are proper and that there's no money laundering occurring. We're reviewing intercompany payables and receivables along with our accounting reviews on a monthly basis, And as mentioned, we're doing a physical inventory for fixed assets and, of course, production and expense inventory. So those are our top 20 controls. And if we talk about, well, how do we actually make sure that those are properly monitored, this is a process flow for SOX 404, but I like to use this slide because what it's really saying is pay attention to your significant processes and your significant GL accounts, and always ask yourself the question, what can go wrong? And again, it could be something in the accounts payable process. That's where most of your money's flowing through. The second largest payment process, of course, is payroll. And what we want to do is ask ourselves, do we have the right controls in place? Are we evaluating and monitoring those controls? And do we report results to auditors that are correct and true? There are 4 levels of continuous monitoring, and these fit into our 3 top corporate controls. And user access is one, application configuration monitoring, business transaction monitoring, which hopefully would be more than just sampling a transaction. And then, of course, reviewing master data records and ensure that the right people have access to those records and that those master data components are updated on a regular basis. So why do we care about continuous controls monitoring? Well, it's a detective control, and a really good CCM process is getting into the prevention side of things. And what we're really doing is with a CCM process, we're actually speeding up the cycle time because we're looking at a control problem more in a timely manner, and then we can react to that besides waiting for a long time to actually do a sample test. With CCM, we actually are reducing the risk of fraud because we know when controls may be circumvented or not accurate, and we can actually find some collusion types of situation with continuous transaction monitoring because we're actually using detective controls along with preventative controls. So very good process. And then with CCM, we're avoiding the complex testing and statistical sampling, and we're actually paying attention to making sure that testing is done in real time more than after the fact. And, of course, our financial results are going to be true and accurate, and we know that our payment processes are going to be in good shape. So here's our case for CCM. It's a powerful detective control and should be considered in the design of internal controls, especially if you're focused on fraud detection. And what we're doing with CCM is we're assuring that controls are in place to prevent and detect future fraudulent transactions. Okay, here's our next polling question.
We already did this polling question, so we could just continue on to the next slide here, and I can jump in if Jason, you don't mind handing controls over to me.
Sure.
That was really helpful and informative information, Chris. And thanks, Jason. Okay, so you guys should be seeing my screen at this point.
We do.
Great. Well, Chris, thanks so much. Really helpful information and great list of controls for people to take into consideration. There were a couple questions that were coming in asking if they were going to be able to receive the slides, so we will be sharing out the slides for this, so you don't have to try to write them down so quickly. But one of the things that's just really interesting to think about is how does automation play a part in managing all these different types of controls, right? And it's an ongoing process, as Chris was saying. It's never one and done. You always need to be thinking and monitoring and understanding how your organization changes, how you're thinking about it as well. And I thought it would be helpful to share an example that's a real-world example that happened here at MineralTree, and it's all about improving controls, right? And we are an organization where we're using our own software as well. But what happened was There are fraudsters out there that work really hard at creating fake invoices, and they look quite real, right? And so this is an example of an invoice that I received as the head of marketing for our organization, and it came into our accounts payable department, right? And what's interesting as you look at this is think about the amount, right? $3,799. Not a real large amount, right? And so what you'll find with most fraudsters, especially on kind of the invoice fraud, is the amounts are coming in at levels that are supposed to fly under the radar, so to speak, right? They don't want to have these exorbitant amounts that are going to raise red flags. And so in this case, this one came in, and thankfully we have the process and controls in place so that the invoice comes in, it gets entered into the system. The first red flag is, okay, well, this vendor isn't already in our system, right? Nonetheless, the invoice is still going to come to me because it could be where I do have a new vendor, right? So I review it, and then as I see it, I recognize that this is a fake invoice. I don't have a vendor from a leader's media group. And as a result, I'm able to then quickly in my system view it, check to see if there's any other histories. I can speak with my team, but I can then reject that particular invoice, and it comes back into our AP team, and so that they've got that process that is bringing both parties together when it comes to an invoice and actually sending out a payment. If an organization didn't have this control in place and the invoices come in, and maybe there's a lot of marketing invoices, and so the AP team just kind of manages them and doesn't have that proper segregation of duties and the steps in place to get the appropriate approval, very easily a company could have made that payment. Other things to think about with the invoice are, what is the invoice number? If it's a new invoice, is the number 01, 02, or is it really high? There's keys to look at within an invoice to detect if it's fraudulent as well. But one of the most important things here is that having that process in place so it comes in and it's approved and there's tracking is a way that we've just mitigated my AP team from actually making a payment out, which would have been a fraudulent invoice. And my guess is, as I've shown this example in other webinars and people have chatted in saying, oh, our company received the same one, they're sending it out to a lot of people. It's rather sophisticated. And so I think really important for companies to think through how have we structured our process and how we put the proper controls in place to mitigate the risk of these fake invoices coming in. And when you think about that, it's important to notice that AP in general today in today's market is very manual, right? Not to suggest that companies haven't put the appropriate thought process into every step of it, but there's a lot of steps, and those steps are receiving the invoice, and if you have a decentralized or multiple entities or offices in different locations, how are you getting all those invoices in? And then how do they enter your system? Typically someone's manually keying those in, and then they got to figure out how am I going to get approvals, and they've got different email flows going back and forth. And then there's the coding side. So you have kind of this invoice capture and process, coding and processing side of things, and then you have the payment execution side of things. So, okay, do I have the authority to then release the money, and creating that segregation of duties of who's actually going to release it and how you reconcile those payments. So by and large, it is quite manual. Great to see on the attendees here that probably over, I think I said around 40% of the attendees already actually have an AP automation solution in place. That's great. You're modern, you're forward-thinking, and you're leveraging technology to create efficiencies for your organization, and in doing so, you're increasing your controls. And so what happens when you think about the automation side of things is that invoice capture, coding, routing for approvals, all the workflows that would go into that, all are bundled into a software package, and that allows for a much more efficient way to do it with visibility and tracking into that process. Now, you're still going to want to make sure, okay, did this get coded correctly, because you want it all syncing back in with your accounting system, but by and large, then you get into the release of payments, and that becomes automated, right? Often companies today, as we saw earlier, 74% of companies that experience some type of check fraud. That's a huge amount for a payment channel that, frankly, is very manual. Often companies are having check stock sit in their office. It just creates the opportunity for fraud, both external and internal, across the board. And so with solutions, you have the ability to kind of offload that check processing, or more so, transition those payments to electronic payment methods, whether it's ACH or virtual card, which we can chat about as well. And so how does that really work? The key is the tight integration with your accounting systems, right? GP, NAV, and examples, information flowing back and forth there, right? And then on the other side of it is that the integration with your bank, right? So MineralTree, for example, is not never takes possession of your funds. We're the facilitator of your payments, working in participation with your bank, right? And so in that case, as you're making the payments, reconciliation is streamlined as well. And so what that means is, for us, right, you've got your vendors are sending you all their invoices. It might come over paper, it might come over email, you may scan them in, you may have some actually come down from your accounting system, but the key is, how are you going to get them into your system? And for us, that invoice capture is critical, right, where you're digitizing using OCR technology as well as human review, making sure you're kind of getting rid of any potential errors. And then from there, this is where you get into some of the kind of the fraud protection. If you're using purchase orders, then you have a purchase order matching, right, to make sure that invoice is tied off on both sides. Or if you're not, you're routing that to the appropriate person, and then within there you can have segregation of duties for that invoice. Maybe it's either by vendor or by the amount. You could have maybe 4 people that need to approve it if it's for a couple $100,000 for a particular invoice. So putting those steps in place in a manual process is actually quite cumbersome, but having it here in an automated fashion both gives you the flexibility, but also preserves the audit trail when it does come time to audit as well. And so from there, you've got that approval process. And so now you move into the payment authorization side of things, right? You're importing your payments. You've got your different bank accounts that you're going to be sending those funds from, but you're creating that segregation of duty as well. So the person that's creating all the payments, so in essence, you're kind of, whether it's monthly, weekly, bi-weekly, however you do it as your organization, you create a segregation of duty. So the person that's saying, I want to pay this, isn't the same person that's going to then release those funds, right? Because that's in that moment, that's where you have the potential for fraud that could be happening. And with our system and other systems that automate the accounts payable process, you have the ability to create that segregation of duties, which is really important. And so it creates that end-to-end control. And there's in MineralTree's case, we are also helping companies with a kind of fraud protection that's guaranteed fraud up to $100,000 on online fraud. But the key is then how you're making those payments and giving visibility into those payments as well. So one accounting manager is going to get the payments all ready to go, and then they'll say, okay, these are all ready. Now you're going to send those off to whether it's the CEO or the CFO or whoever's authorized to release funds from the company. Now, it may be in that manual process, what happens is, the accounting manager is chasing down the CFO, and they sit for an hour and 15 minutes, they're sitting in an office and they're just signing checks. Now, the challenge is there's not a lot of visibility when they're just sitting there signing checks about what it is, who am I paying, right? Now, when you think about bringing that all into an automated fashion, now you're actually increasing the visibility you have into all those payments. So take whether it's check or ACH, however the payment's going out, what you want to know is this payment amount consistent with all the other payments that I've made to this particular vendor? Right? Is the cadence at which these payments are going consistent with how we've been doing it? With a system that can actually provide visibility into that, now you have a lot more control over it. You can see the approval process. You can see the coding that it's coming from. But most importantly, you have that history there to really understand, yes, this looks normal. There isn't any red flags here. This vendor's been in the system. How long has that vendor been in the system? All that's there, and you provide that visibility to the CFO. Now, when it comes down to how do you actually want to pay them, that's another really important part, right? As I mentioned before, checks do represent a great amount of fraud risk. Now, what we can do is it's important for companies to think about an overall payment strategy. Are you optimizing the way in which you're making your payments? There are hundreds of thousands of vendors out there that accept credit card payments. The challenge for so many companies is, how do I figure out which ones actually would accept a card payment from me? And then take it a step further, how do I facilitate that and do it in a secure way? I surely don't want to give them my credit card number that is on the plastic that's in my wallet. And so there's technology that MineralTree allows companies to do to optimize that payment experience. So we, in essence, will help you determine, of all your vendors, here are the vendors that would accept a card payment. And then taking that one step further, the true card is never there. We're going to actually help with our proprietary network. We're going to actually help you create a one-time use card for that particular vendor, for that particular amount, for a set amount of time in which it will remain open. Right? So the beauty there is you're decreasing that fraud risk, that someone can do bad things with that particular payment. In addition, we have a partnership with American Express. So if you happen to have an American Express card built in to our solution, you can log your card into our solution, and then we'll create that same virtual card number for all those payments, and you benefit by earning those rewards as well. All of it is to move away from the more risky payment methods and actually the payment methods that take up so much time, which is checks, to the more efficient payment methods, whether it be ACH, which we're going to be tying into your bank, right, or the card payments to increase security as well. Now that information all gets submitted back up into your ERP, information flowing off to your banks, all behind the scenes without you having to manage that. The beauty is to help ensure you're at least protect yourself on the check side, because we know probably about 85% of all organizations are paying all their payments by check right now. And so to help you increase security on that side, what we'll allow you to do is then also create a positive pay file, which you can then send up to your bank. That alerts your bank the checks that have been written and who to be thinking about, who's going to be cashing those checks. So it adds another level of security on that side of things. And so there's a lot of steps throughout the AP process that when you're automating it, that you're able to put these different controls in place that Chris was talking about earlier. And so you can create this end-to-end solution which improves your visibility, gives more segregation duties, and frankly, it's sad, but there's people do bad things both externally but also internally. And when you have dedicated processes in place and you put an automation solution in place, it makes it that much more difficult, or puts a little bit more fear for people that are trying to accomplish these kind of fraudulent acts against companies in the payment process. So the next question might be, well, how do I know it's time for my company to think about it, and when should we automate it, right? And one of the few things to think about would be, really it depends on your payment volume. If an organization is processing over 50 payments or invoices per month, then it makes sense to have a conversation and consider how AP automation would fit into your existing process, right? Because it's really working within your existing process. It's not redefining your whole process. The other telltale sign is if your organization is thinking about hiring because the AP team is struggling to keep up with your company's growing and they've got a lot of invoices coming in. That's an opportunity there for you to say, okay, well, companies on average are going to save about 60% of time when they automate their accounts payables. That gives their staff members the ability to focus on other more meaningful activities, right? And that's the challenge. If you see that they're not getting to the things that you want the department to be getting to, then it's time to think about it, right? One of the big ones is if you have distributed entities or different locations, across the country. This helps centralize it all, gives people visibility into it. And again, the biggest one is fraud. Like, fraud is alive and well, and companies need to be vigilant about it. You don't want to be backpedaling when you see it happen and trying to put things in place. You want to have it be something that's the forefront that your organization has, as Chris was talking about. You're thinking about all the controls you want to have in place so that you make it that much more difficult for the fraud to happen, because it's costly. When it does happen, it can be very costly for organizations. Countless times we talk to our clients on the business email compromise side of things. Such an easy target, right? We had one that came into one of my team members that was fake to be our CEO, saying, can you work with AP and have them wire this money out, right? And the reality is, with a solution in place, it's going to catch that, creating that segregation of duties, that nothing can go out without being entered into the system, makes it so that verification or the authorization before the wire goes out is then approved by the CEO again, and he may be the one that had sent it, right? And he's like, I didn't send this, and countless organizations we've talked to have experienced that. So a lot of things to consider on the controls that can help prevent fraud, and just encourage the team out there to evaluate it and think what's best for your organization, and don't take it lightly. So with that, what I'll do is I'll pause. Again, if people are interested in learning about how automation might fit into their solution, then by all means, feel free to reach out to the email address above. And then maybe what we can do is, if there are certain questions, Jason, we can take it to any questions that may be coming in, and see if Chris, thank you. I don't know if you have anything else to add as well.
No, I think, Stephen, it was a great presentation, and I love the way that Mineral Tree's applications support internal control enhancement. So thank you very much.
Great.
If you have a question, please do enter it into the Q&A block to the right of the main presentation area now, and we'll get to as many as we have time for. A comment that came in earlier that, Chris, maybe I'll pose to you for comment is just noting not to forget about asking for SOC reports from key vendors as well, especially cloud vendors.
Yeah, with card vendors, really important to look at that. And then what happens, of course, with card vendors and payments is that we want to make sure that in any invoices that's paid with a card is not submitted either accidentally or intentionally with a regular invoice. So sometimes that's a cause for a duplicate. So important to have those checks and balances in place. And just to mention with P cards and any corporate cards that employees are actually using, and as Stephen said, this is plastic in your wallet, you want to make sure that cardholder agreements are in place for using that card. And actually, credit card use and abuse is a whole separate topic. So thanks for the question.
There's a follow-up here noting, well, maybe I'll pose this to you as a question. Do you often spend time confirming segregation of duties conflicts related to workflow, the ability to change workflows or assign workflows? Yes,
as a matter of fact, what we do is there's a couple levels of system access and segregation of duties. One is the actual location of a department. Typically, accounts payable departments, payroll departments, anyone that is handling checks and hopefully not checks, but payments, is separated from a kind of the mainstream. And what we're doing is want to make sure that, number one, data is protected, particularly employee data, with all the data protection rules and regulations, and certainly anyone that might be able to get in and process a manual payment or an electronic payment. So that's one level of segregation duties. The other thing with system access is to look at all your opportunities for segregation of duties conflicts within a system. It could be within the ERP. As I mentioned, the example is you want to make sure that there's intra-segregation of duties and system access controls. And basically, the prime example, somebody in accounts payable can't actually pay that employee when they're setting up the record in the vendor master. The other one is if you're using automation, make sure that roles and responsibilities are set up properly, roles and rights, and that would be ensuring the segregation of duties are in place for processing any electronic invoices and payments, so that basically it's defining almost a strategy for your system access and the segregation of duties programs, just to make sure you're covering all the bases. The one that comes up a lot is bank accounts, ensuring that an employee cannot change a supplier's bank account without proper authorization. So there's both internal and external, obviously, payment risk there. And then another big one is making sure that we check the employee master against the supplier master, at least on an annual basis, to make sure you don't have employees that are really tricky and they're actually posing as suppliers. And that would include checking name, address, any contact information, and particularly bank account information. So yeah, that's a great question.
Stephen, maybe I could turn that one over to you as well when it comes to, let's say, process controls. Are there things that your clients are particularly thinking about?
Yeah, it's a good question, Jason. I mean, I think in general, a lot of our clients, the ability to have a hierarchy, both whether it's invoice approval or payment release, is really important. And then like as Chris was talking about, looking at kind of who has the ability to then change either the address of the vendors or update bank account information. Like one of the key things is, and it happens here on my side as well, of when a vendor says, hey, can you update our address or our ACH information, that there's the proper steps to then verify that as well, and not just go in there and wholesale change it. I think that hierarchy and tiers of who can approve certain invoice amounts and then release certain amounts becomes really important, right? Because that just mitigates the potential for fraud to happen, or puts another set of eyeballs on it and more awareness around the different payments that are going out tied to those vendors. And so I think that part is important. And as I mentioned before, the ability to see the history of your vendors and those vendor payments and see the consistency, and if one is standing out, having a process in place that tracks that communication flow as well, right? So if a CFO gets a payment that is $40,000 more than the normal for that particular month for a vendor, they can place it on hold or reject that payment to go out, follow up with some more specific questions about why is this much more, is this normal, so that it puts all of that track then within a system from an audit trail perspective as well. I think the other part that often goes unnoticed is the audits in general. When an audit happens, it's quite disruptive for the finance organization. But when you have a solution in place that is keeping track of all those approvals, both from an invoice side and the payment side of things, how the payment went out, what method it went out in, all of that concentrated in one centralized system, auditors now can just log into our system and they see all the details tied to specific invoices that the auditors may have pulled out and wanted more history on. So that's another beneficial aspect of it that is sometimes goes unnoticed as well.
All right. We have a question asking about time frames. So when setting up these kinds of, and maybe we could look at this from two perspectives, when setting up these processes from in terms of solution, how long does it typically take a company to get up and running?
So for solutions such as MillerShade, the beauty is that it's not a heavy lift on the IT organization, right? Often you hear about big integrations. This is something that is, companies can be up in a couple weeks, right? And that's the beauty of it, because it's playing into your existing processes, but then putting these extra controls in place. And for example, our implementation and support teams are all there, kind of leveraging all the best practices from the 1,500 plus clients that we have to then share that with our new clients as they kind of build out this. So it's quite fast to get up and going, and it's that API level integration that's really important as well to make it happen. So how are we doing on time here, Jason? It looks like we're at the top of the hour. So
we are.
Are there any other questions that have come in that last ones to answer?
I don't have any others. Make a final call here. If you're holding on to one, please do enter it right now. I'll just note we have recorded today's event, and as Stephen said, we will be reaching out with more details. We also have a very brief poll that will pop up after you leave. Any feedback you can provide would be greatly appreciated. It only takes 15 or 20 seconds. So I am not seeing any other questions at this point, so I think we can begin wrapping up. Stephen, Chris, thank you both so much for presenting today. Any closing words?
And I always enjoy sharing my experience with internal controls with audiences, and hopefully this helps someone and gives you an idea on maybe how to either implement some new controls or enhance what you already have.
Great. And Chris, thank you again for coming on the webinar with us. We always appreciate, as MineralTree, to provide kind of a broad set of information to accounting professionals out there to help them continue to advance their careers and kind of advance the industry as a whole to transform into a more modern approach for managing accounts payable.
Thank you.
Well, thank you both. And with that, we are going to conclude today's event. Have a great day, everybody.